Are you ready for the next massive crypto move? The market is sending mixed signals that have everyone on edge. We're seeing huge institutional players like Tom Lee and Michael Saylor making billion-dollar bets on Ethereum and Solana, while on-chain data shows the wealthiest families are quietly buying up all the available supply. At the same time, analysts are warning of a potential major crash after one last epic rally. The key catalyst everyone is watching is the Federal Reserve's next move. With inflation ticking up and the job market showing weakness, a rate cut seems almost certain, which could pour rocket fuel on the market. Bitcoin is showing incredibly strong technical patterns, with some traders targeting $123,000, while Bitcoin's falling dominance suggests a monster altcoin season is right around the corner. This is a critical moment you need to pay attention to. In the latest video from Altcoin Daily, the focus is on Solana's impressive growth and increasing institutional interest. Solana's total value locked, TVL, has reached a new all-time high of $12.1 billion, indicating a strong and healthy network even though its price is down from its peak. A major sign of institutional confidence is the Nasdaq-listed company Forward Industries, ticker FORD, raising $1.65 billion to invest in Solana for its corporate treasury. Kyle Samani of Multicoin Capital, a longtime Solana supporter, is now the chairman of Forward Industries and personally invested $25 million in this venture, highlighting his strong belief in Solana's future. The video suggests Solana is well-positioned to become the go-to blockchain for tokenizing financial markets, a trend gaining traction with Nasdaq filing with the SEC to tokenize equities. This is because Solana can handle a massive 14 billion transactions per day, enough to settle all global securities markets. The discussion also touches on other altcoins making moves. Propi is noted for achieving MiCA compliance in the EU, opening it up to a large regulated market. Métis is highlighted for its work on decentralized sequencers, which could be a solution to potential SEC concerns about centralization in Layer 2s. Finally, the Avalanche ecosystem is mentioned for the high yields available on its DEX black hole, with some pools offering APRs between 400% and 900%. The video makes a strong case for Solana, and recent market events seem to back it up. The news about Forward Industries raising $1.65 billion is a significant signal of institutional conviction, moving beyond just holding crypto to actively using it in corporate treasuries. This isn't an isolated event. Corporate treasuries now hold over $1.7 billion in SOL, and there's chatter about a potential Solana ETF, which could bring in even more institutional money. Solana's price reflects this optimism, currently trading around $233, up significantly over the past month. The total value locked, TVL, has also continued to climb, now sitting at a record $12.2 billion, which is more than several major Ethereum Layer 2s combined. The narrative that Solana is built for the tokenization of real-world assets is getting a boost from Nasdaq's recent filing to trade tokenized securities. With its high transaction capacity, Solana is a natural contender for this role. While the overall crypto market sentiment is currently neutral to fearful, driven by macroeconomic factors like potential Fed rate cuts, Solana's specific catalysts are creating a distinctly bullish microclimate. The high APRs on Avalanche DEXs like Black Hole are also indicative of a broader hunger for yield in the DeFi space, though the sustainability of such high percentages is always a question. In the latest video from Crypto Rover, the host explains his recent $1 million profit from predicting Bitcoin's current breakout. He points out that Bitcoin has overcome a major resistance level, forming patterns that suggest significant upward movement. An inverse head and shoulders pattern points to a price target of around $119,000, while a larger falling wedge pattern suggests a move toward $123,000. He also notes that a CME gap above the current price is likely to get filled. The video anticipates high volatility due to the upcoming release of core inflation data. If the inflation numbers are lower than expected, It could trigger a big market pump and potentially lead to a 50 basis point interest rate cut at the next FOMC meeting. The analysis also touches on the increasing M2 money supply as a bullish sign for Bitcoin and mentions that the fourth quarter is historically strong for crypto. For Ethereum, the outlook is also positive, with a personal price target of around $6,000, even though it's been slightly lagging behind Bitcoin. The video's bullish outlook on Bitcoin is lining up with some current market trends. As of today, Bitcoin is trading around $115,582, showing strong momentum after recently breaking key resistance levels. The analysis in the video hinges heavily on the upcoming inflation data and the subsequent FOMC meeting on September 16th to 17th. Recent reports on September 11th showed that the annual core inflation rate held at 3.1%, which was in line with market expectations. This has fueled optimism for a potential rate cut, with crypto markets rallying on the news. Ethereum has also seen a positive response, currently trading around $4,420. The market sentiment is currently neutral, suggesting it's in a transitional phase, waiting for a strong catalyst to determine its next major move. While the technical patterns discussed in the video, like the inverse head and shoulders, are compelling, the market's direction in the immediate short term will likely be dictated by the Fed's commentary next week. Institutional interest remains a key factor, with spot Bitcoin and Ethereum ETFs seeing significant net inflows recently, which supports the bullish case. In the latest video from the Crypto Tips channel, the host explains that HODLing, a term born from a typo in a 2013 Bitcoin forum, has become a core philosophy in the crypto world. It's about holding onto your coins through market volatility, ignoring the noise, and believing in the long-term value. For many Bitcoin supporters, it's a stance against emotional trading and government control. Glassnode data shows that 70% of Bitcoin hasn't moved in over a year, which helps stabilize the price during downturns by reducing the available supply for panic selling. However, the video warns that applying this same mindset to altcoins can be risky. Many altcoins from the 2017 ICO boom have lost over 90% of their value, and over 60% of those tokens are now considered dead. The video points out that holding on to failing projects can mislead new investors and create a zombie economy where bad projects linger. True hodling is about conviction in a project's fundamentals, like Bitcoin's decentralization and fixed supply of 21 million coins. The video advises against blindly holding altcoins, especially those that are centralized or don't have a fixed supply. For those who choose to HODL, the video recommends doing thorough research, diversifying your portfolio, and most importantly, using self-custody with a hardware wallet to keep your coins off exchanges. The concept of hodling is as relevant as ever in the current market. Bitcoin is currently trading around $115,818, and Ethereum is near $4,500. The market sentiment is currently neutral, suggesting a period of consolidation after a recent surge. This surge was partly fueled by cooling inflation data, which has increased expectations of Federal Reserve rate cuts. This macroeconomic environment could be favorable for assets like Bitcoin, which some view as a hedge against currency debasement. In the latest video from Lark Davis, the big question is whether it's too late to get into crypto. The short answer is no, but you're definitely not early anymore. He suggests that the market's truly explosive parabolic phase hasn't even started yet. The total crypto market cap currently sits around $3.9 trillion, but he sees a plausible peak for this cycle between $8 to $10 trillion, potentially extending into 2026. This would represent about a 2.5x increase from current levels, with smaller individual coins likely seeing much bigger gains. Lark's assessment that we're in a not too late but not early phase feels spot on for the current market mood. The total crypto market capitalization is hovering right around the $4 trillion mark, confirming the video's data. We're seeing Bitcoin trade strongly at about $114,000 and Ethereum holding firm around $4,400, which shows the majors have already had significant runs. Yet, the general sentiment, reflected in a neutral fear and greed index, isn't one of widespread euphoria, which historically signals a market top. In the latest video from the Ben Cowan channel, the discussion centers on the newest inflation report and its potential effect on the Federal Reserve's upcoming decisions. The headline inflation rate for August came in at 2.9%, which was in line with market expectations. A closer look shows that rising food, beverage, and housing costs were the main drivers of this figure. Core inflation, which strips out food and energy, held steady at 3.1%. Cowan points out that while inflation is ticking up, the labor market is showing signs of weakness. Initial jobless claims recently jumped to 263,000, the highest they've been since late 2021, and the unemployment rate has risen to 4.3%. He argues that the two-year Treasury yield, currently around 3.5%, is a key indicator that often predicts the Fed's actions. With the Fed funds rate at 4.5%, there's a significant gap. Because of the sticky inflation, Cowan believes the Fed will likely only cut rates by 25 basis points, even though he suggests the weakening job market could justify a more aggressive 50-point cut. He also briefly touches on international inflation data, noting that rates in the UK have been trending higher, reaching 3.8%. Ben Cowan's breakdown of the economic data presents the classic dilemma facing the Federal Reserve. The latest August CPI report confirmed the numbers he discussed, with headline inflation at 2.9% and core at 3.1%. This persistent inflation, particularly in essentials like shelter, complicates the case for significant rate cuts. However, the labor market signals he highlighted have become even more pronounced. Initial jobless claims did indeed spike to 263,000 for the week ending September 6th, backing up his concerns about a cooling job market. The market is now overwhelmingly pricing in a rate cut at the September 16, 17 FOMC meeting, with the debate shifting between 25 and 50 basis points. The two-year Treasury yield has hovered around 3.52 to 3.54%, reinforcing Cowan's point that the bond market is signaling a need for lower rates. For the crypto market, this is a pivotal moment. Following the recent inflation data, Bitcoin pushed above $114,000 and Ethereum is testing the $4,400 level as traders anticipate looser monetary policy. The market seems to be betting that the Fed will prioritize the weakening labor data over the slightly elevated inflation, which is generally favorable for risk assets. However, the crypto rally appears somewhat hesitant, with Ethereum facing strong resistance at $4,500 as some long-term holders take profits. This suggests that while a rate cut is expected, its size and the Fed's forward guidance will be critical in determining if crypto can break out of its current range. In the latest video from Coin Bureau, the channel tackles the rumor that Wall Street veteran Tom Lee saved Ethereum. The short answer is no. Ethereum has never had downtime and wasn't in need of saving. The real story is about a massive institutional investment, not a rescue. Tom Lee, a former chief equity strategist at JP Morgan, is now the chairman of a company called Bitmine Immersion Technologies. In a major strategic shift, Bitmine raised $250 million from venture capital giants like Founders Fund, Pantera, and Ark's Cathie Wood. Instead of mining Bitcoin, they used the funds to buy Ethereum for their corporate treasury. Tom Lee's move with Bitmine is a powerful signal of the shifting sentiment in high finance, where Ethereum is increasingly seen not just as a speculative asset, but as foundational technology. Lee's Wall Street convergence theory is already showing signs of life, with institutional adoption accelerating in 2025 and major financial players exploring asset tokenization. The recent passage of the Genius Act in the US and the implementation of MiCAR in Europe are creating clearer regulatory pathways, which is encouraging more conservative capital to enter the space. Currently, Ethereum is trading around $4,420, meaning Lee's prediction of up to $16,000 by the end of next year represents a nearly 4x increase, a bold but not impossible target in the crypto world. Bitcoin is hovering around $115,000, indicating a strong market, but also highlighting the ambitious nature of Lee's long-term crypto price targets. The concern about systemic risk is valid, especially with the memory of past leverage-fueled collapses. The market sentiment, currently neutral according to the Fear and Greed Index, could quickly shift, and a significant downturn could test the stability of such a large, concentrated position. This entire situation transforms Ethereum into a high-stakes play, representing the deepening and potentially risky integration of traditional finance and the crypto ecosystem. In the latest video from Cryptos R Us, the host breaks down a wild day in the markets. Things kicked off with a bit of a scare after the CPI inflation report showed a headline number just 0.1% higher than expected. This initially sent crypto dipping. However, the core inflation numbers were in line with expectations, and more importantly, jobless claims came in much higher than anticipated. This combo of a slowing labor market and manageable inflation sent a clear signal to investors. The Federal Reserve is very likely to cut interest rates. This bad news is good news sentiment caused both the stock market and crypto to rally hard. The Nasdaq and S&P 500 hit new highs, and after the stock market closed, that money seemed to flow right into crypto. Bitcoin, which was stuck under $114,000, pushed up to $115,000. Altcoins also saw big moves, with Solana, Sol, moving toward $230 and looking to test its old high of $260, with $300 in its sights. Ethereum is sitting around $4,500, and Sway is back to $3.70. The host also points to the huge demand for Gemini's upcoming IPO, which was so oversubscribed they had to raise the price by 24% as another sign of massive institutional appetite for crypto. He suggests that we're heading into a strong altcoin season and the good times are likely to continue, with a possible brief pullback for profit-taking after the FOMC meeting next Wednesday. The video's analysis of the market reacting positively to negative economic data is spot on. That trend is holding as the latest jobless claims spike to their highest level in nearly 4 years, reinforcing the market's bet on Fed rate cuts. The CME FedWatch tool now shows a near 100% probability of a rate cut at the next meeting, which is fueling this risk-on sentiment. The price points mentioned in the video have held and even pushed higher. Bitcoin is currently trading above $115,500, showing sustained strength. Solana, a key coin he mentioned, is now trading around $233, continuing its climb toward the $260 resistance level. Ethereum is also holding steady near $4,400. The point about institutional appetite is well made, especially with the Gemini IPO pricing above its initial range, raising $425 million. This, combined with the generally bullish or extreme greed sentiment across the crypto market, suggests the upward momentum could continue, especially as Bitcoin dominance remains relatively low, giving altcoins more room to run. In the latest video from Crypto Banter channel, the host introduces a method for trading crypto news faster than the general public, claiming it's a legal way to get an edge similar to what insiders have. The tool at the center of this strategy is the 24/7 Terminal, a downloadable desktop application that aggregates breaking AI-filtered crypto news. It allows users to execute trades instantly on connected exchanges like Blofin and Binance with a single click. The idea of a dedicated news trading terminal for crypto is interesting because speed is a huge factor in a market that runs 24/7 and reacts instantly to headlines. The current market environment, with Bitcoin trading around $114,000 and showing sensitivity to macroeconomic data like inflation reports, makes the concept of a speed advantage very attractive. We've seen significant price movement in both Bitcoin and Ethereum, with ETH recently climbing to the $4,400 level partly due to cooling inflation data and expectations of Fed rate cuts. In the latest video from Crypto Casey, the main idea is that a huge altcoin season could be just around the corner. She points out that money is starting to move from Bitcoin into big-name cryptos like Ethereum and Solana, which is a classic sign. The most important signal she mentions is Bitcoin's dominance, or its share of the total crypto market, which is starting to fall below the 60% mark. This is a pattern seen before the massive 2021 altcoin run. Casey warns that while the overall trend is bullish, there will be wild swings with scary drops of 20% to 40% along the way. Her advice is to ignore emotions, follow the larger trend, and have a plan to take profits. She also touches on the bigger economic picture, noting that the Federal Reserve is expected to cut interest rates at its September 17th meeting, an event that has historically been good for crypto prices. Casey's analysis of an approaching altcoin season has some solid points, especially when looking at the historical flow of capital. Right now, Bitcoin is trading around $115,582, and its market dominance is sitting at about 56%. While it hasn't had a dramatic breakdown just yet, it's lower than it has been, suggesting investors are getting more comfortable branching out into other assets. Ethereum, currently priced around $4,420, and Solana, which is making waves at about $233, are definitely capturing attention. Solana, in particular, has seen a nearly 15% price increase in the past week, outperforming much of the market. In the latest video from Data the host breaks down Bitcoin's reaction to the latest economic news, where job losses came in higher than expected. Initially, Bitcoin saw a quick drop of about $1,200, falling from around $114,500 to $113,300. However, the price recovered almost immediately. The host explains that these sharp moves around data releases are often designed to trigger both long and short stop losses, a process he calls whipsawing the market to grab liquidity. The analysis in the video is lining up well with current market behavior. Bitcoin is presently trading around $115,800, showing a strong push towards the $115,000 target mentioned. This move is largely fueled by recent U.S. inflation data coming in cooler than expected, which has increased market bets on a Federal Reserve rate cut at the upcoming FOMC meeting next week. The Crypto Fear and Greed Index has moved into a neutral range, suggesting that while the extreme fear has subsided, the market hasn't reached a state of high-risk greed just yet. In the latest video from Crypto Wendy, the discussion centers on the growing anticipation for spot crypto ETF approvals in the USA, predicted for the fourth quarter of 2025. A key development highlighted is Bitwise's launch of a physically backed XRP ETP on the Swiss stock exchange. This is significant as the product tracks XRP's value, which has a market cap of over $80 billion. The video points to the expanding use cases for the XRP ledger, XRPL, especially in cross-border payments, institutional DeFi, and real-world asset, RWA tokenization. This ties in with Nasdaq's recent request to the SEC to permit stock tokenization. The tokenized asset market is already nearing $300 billion, years ahead of schedule, with forecasts suggesting it could reach $2 trillion by 2030. Another major piece of news is the partnership between Ripple and Chainalysis. Chainalysis will now automatically track over 260,000 different tokens on the XRPL, greatly improving compliance and visibility for institutions. This is crucial because Chainalysis works with governments and financial institutions, which could accelerate XRPL's adoption in mainstream finance. The video also references a 2023 study from the journal Blockchain Research that found enhanced analytics improve regulatory compliance by 40%. The developments discussed in the video are happening at a critical time for XRP and the broader crypto market. The partnership with Chainalysis is a strategic move for Ripple, directly addressing the compliance concerns that have historically made institutional players hesitant. By integrating Canalysis's analytics, which are trusted by regulatory bodies, Ripple is essentially rolling out the red carpet for banks and large financial firms to use the XRPL. This isn't just about tracking transactions, it's about building a framework for trust and transparency. This aligns perfectly with the explosive growth in real-world asset tokenization, a market that has surged to over $24 billion this year. As institutions increasingly look to tokenize assets like bonds and real estate, having a compliant and efficient ledger is paramount. In the latest video from the Modern Investor, the conversation centers on the massive and accelerating accumulation of cryptocurrency by the world's wealthiest entities. It's pointed out that very rich families, particularly in Asia, are rapidly increasing their crypto holdings, viewing digital assets as a necessary part of a diversified portfolio. This trend is causing a supply squeeze, with less Bitcoin and Ether available on exchanges. The video references past advice from institutions like BlackRock, which apparently told clients to raise their Bitcoin allocation to an astounding 80% when the price was between $10,000 and $15,000. Michael Saylor's forecast of a $24 million Bitcoin is also mentioned as a factor driving this institutional urgency. This isn't just limited to high finance. Even everyday companies like Reborn Coffee are publicly stating they're looking into adding crypto to their company treasuries. The creation of new large funds, such as the $100 million Next Generation Fund 2, shows that this movement is organized and growing. The speaker suggests we are witnessing a huge shift in wealth and that the general public hasn't yet grasped the scale of what's happening. The video's focus on accumulation by the wealthy aligns well with current market dynamics. We're seeing Bitcoin hovering around the $114,000 mark and Ethereum near $4,400, showing significant strength. This price action is happening alongside a clear trend of institutional adoption that, while still considered early, is gaining serious momentum. A recent JP Morgan report noted that institutions now hold about 25% of Bitcoin ETPs, and a survey found 85% of firms plan to allocate to digital assets by 2025. This isn't just talk. Spot Bitcoin ETFs saw net inflows of over $757 million on a recent Wednesday, with Ethereum ETFs also turning positive. The regulatory scene, which was once a major roadblock, is now shifting to support the industry. The SEC, under a new administration, has initiated Project Crypto to modernize rules and has signaled an end to the previous enforcement-heavy strategy. This changing stance in the U.S. is creating a more welcoming environment for large-scale investment. The video's point about a supply squeeze is validated by the continuous flow of assets into institutional custody and private wallets, a trend that is likely to intensify as regulatory clarity improves and more traditional financial players, like those partnering with Fireblocks and Circle, build out their infrastructure. In the latest video from the Alex Becker channel, the host opens by saying he's going to sell all his crypto, but quickly reveals it's just clickbait for now. He believes a massive crash is coming, but not before another big run-up. He points out that historically, 85% of crypto investors end up losing money because they fail to sell in time. Becker's analysis centers on market psychology and historical patterns, which is a common and often effective way to view the crypto space. His predicted market rotation from Bitcoin to Ethereum to large-cap alts and then to more speculative plays is a well-observed phenomenon from past cycles. Currently, the market appears to be in a phase of cautious optimism. Bitcoin is trading around $114,000, having recovered from a recent dip, while Ethereum is hovering near $4,400. The Crypto Fear and Greed Index is in neutral territory, suggesting the market isn't experiencing the extreme greed Becker identifies as a sell signal. In the latest video from the Crypto Jeb channel, Jeb lays out a strong case for why Bitcoin is kicking off the next leg of its bull market. He points to a mix of technical and fundamental signals that suggest a significant rally is on the deck. On the technical side, an inverse head and shoulders pattern on the hourly chart has been confirmed, setting a short-term price target of around $118,000. This is backed up by bullish signals on the daily chart's RSI and MACD indicators, which have historically preceded major price jumps. Jeb also notes that the Bollinger Bands are showing signs of extreme strength from bulls, further supporting the upward trend. Jeb's analysis lines up well with the current market mood. The technical patterns he's watching are classic bullish setups, and seeing them play out across multiple timeframes adds weight to his argument. Bitcoin is currently trading around $115,582, showing positive momentum and holding above the key levels he mentioned. The fundamental catalysts are perhaps even more compelling. The reported ETF inflow of over $757 million on September 10th wasn't a one-off event. It marked the beginning of a trend, with total inflows for September now exceeding $1.39 billion. This renewed institutional interest after a quiet period is a significant development. Furthermore, the market has almost entirely priced in a 25 basis point rate cut from the Federal Reserve next week, a move seen as a major tailwind for risk assets. While the latest CPI report showed inflation ticking up slightly to 2.9%, analysts believe the Fed is now more focused on a cooling labor market, making the rate cut highly probable. The combination of strong technicals, a flood of institutional money, and a supportive macroeconomic backdrop creates a powerful narrative for Bitcoin's continued ascent.